Well, that's the SGX Nifty indicating a gap up once again after the kind of move that we have seen.
But it's worth taking that chance. If you get stopped out, so be it, but be long in the market.
Global markets rattled today by uncertainty as President Trump threatens to impose higher tariffs on China.
Take a look at the S&P 500 and the NASDAQ here in the U.S. We are down more than 2% for both of those indexes, really telling the story. And that story is a range, a battle between the bulls and the bears over the last 18 months.
Well, the market trend is up, and this half-hour late decline is, part of the course. These things will happen.
Dear traders, have you ever wondered how the institutional traders have not just survived but have thrived in this business over decades? On the contrary, a retail trader brings his money to the markets and loses it all in a span of 2 to 3 months' time. And this is a global phenomena. Happens everywhere and all the time. But why? Why do investors and traders around the globe suffer from a common psychological setback when it comes to making profits? If you have watched the video this far, I'm sure you are keen to know why. Well, in my experience over the years, there can be two possible reasons. First reason being a psychological one, while the other is strictly technical. Investors and traders pay hefty sums for trading tips. They rely on their brokers and dealers for profits. Well, you surely trusted others for profits. But have you ever considered the prospect of investing half of the money that you lost in the markets towards your own education? Investors ignore the prospect of awareness that eventually costs them their capital. Trust me, when you are trading against the lions, traders, you better be educated enough. Moving to the technical vertical, intraday trading is all about time and price. Everything else is irrelevant. To be a successful trader, you need to follow a rule-based trading system. If you do not have a trading strategy, profits can be a very difficult proposition to achieve. I am going to discuss one such trading system that has been in existence for over more than 2 decades and is used by individuals as well as institutional traders with great success around the globe. While analyzing price intraday, 3 frameworks should be given paramount importance: trend, range, and of course support and resistance. Let's talk about trend. Whenever there is trend in the market, this setup will paint only blue bars. Whenever there is weakness in the market, this setup will paint only red bars. Black bars are for no trading zone. This entire color setup is known as XTL, which means Expert Trend Locator. XTL simplifies the difficult task of trend identification during live market hours. It works fine across all time frames. Now let us understand how this trading setup can help us avoid false trades in the market. If you can see carefully, Nifty was trading within a range. It was not trending. But when the price broke out of this trading range, false bar reading appeared, which gave us an indication that a probable trend might be coming, which you can see here. Let us take one more example. Nifty was trading within a strict range from this period till here. Within this period, Nifty tried to break out from the range around here, But if you can observe carefully, this was a false breakout. Prices came back again within the range. Now, false bar reading appeared here too, but it did not continue like it did here, indicating us that this is a false breakout. And again, when the price broke out from this range on the upside, false bar reading appeared again, indicating us that a probable trend might be in play, which you can see here. This study also works fine across all time frames. And finally, let us try to understand how this setup is unique in terms of plotting support and resistance zones in the markets. It automatically tracks the important pivots and plots them with the help of alphabet P and J on the charts. These are the primary support and resistance zones in the market that needs to be carefully watched out during live trading hours. Furthermore, these pivots can be used to project future price movements and their reversal points. Let us try to understand that with the help of an example. If we apply a proprietary calculation on this pivot, we get a trading zone here, which means that if the high of this pivot is taken out in future, prices can move up to this trading zone before finally reversing, which happened exactly the same here. Let us take one more example. If we apply a proprietary calculation to this pivot, we get a trading zone here, which means that if the low of this pivot is taken out in future, prices can move up to this trading zone before finally reversing, as you can see here. And this study also works fine across all time frames.